All right. Hey, everyone. Mark here, Mark B Markets. Thanks for joining me for another Greenbridge Investing Market Analysis. We're going to take a look at Bitcoin today, of course, and I want to answer as many questions as possible. So if you're new, here's how it goes. Just share the link, or I'm sorry, the symbol of the market or the altcoin that you'd like to see. If it's an altcoin, make sure you put USD or USDT after the symbol so I get it correctly. Also, just a couple of things real quick that I want to mention before we get into the Bitcoin analysis here. Training program. I'm a couple of days behind on the scoring. Some of you, as you know, you may be waiting, where's my grade? I apologize for that. As the assignments get more complex, they require more time for me to evaluate. So basically my work exponentially grows. So for that reason, I actually have to raise the price of the program because there's no way I want more than 20 students in my program at a time. In fact, I want less. So the price that you see now on the program, $4.99 or whatever it is, $3.99, I'm going to raise that price to $5.99. Okay, because that's what I need to do to keep there's no way I want more than 20 students. So if you're on the fence right now and you're watching this and you're like, oh, I'm not sure. Well, over the next week, I'm going to raise that price. So it's your chance to now get at least a somewhat better price compared to where the price is going, because it's got to be worth my time. You have to understand, it's a lot of work, and I'm giving personalized feedback, as you all know. Many students are here, and it's very time consuming. On top of that, I have a lot of other work I have to do and all that kind of stuff. So I'm not going to sit here and bore you with all that stuff. I'm just letting you know the price is going up. So those of you that got in at that really good price 15 days ago, you got a good price, okay? Because there's no way I'm going at that price again. Anyway, all right. So everyone, again, I appreciate your patience, and any feedback that you guys have that have been going through the program is welcome. I've been tough on some of you guys, so it's your chance to be tough on me now. All right, so let's get started with this analysis. And by the way, if you're interested, if you're not in the program and you're interested, there's a link in the descriptive portion of the analysis. All right, no more promotion. Let's get into this here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before we talk about Bitcoin, of course, you know today is Monday, right? And I have to take a look at the economic calendar. You should always take a look at this every Monday. It doesn't have to be the same calendar I look at. The calendar is off screen, so you can't see it. But any economic calendar will do. What you want to see are any major scheduled economic events for the week, because these can affect major markets like the dollar or the bond market and stuff like that. And it can affect the position that you're in. So you want to be prepared. Just like what, a week ago, we had on Wednesday the FOMC meeting, right? And Powell confirmed what I've been saying all along, rising rate environment, the Fed is no longer going to stimulate, right? And people are like, oh, I'm so surprised, I can't believe it. Meanwhile, the bond market and the dollar have been showing this for 6 months. But no one pays attention to the bond market. Oh, who cares about bonds? They're boring. I don't trade bonds anyway. Right. Well, the bond market gave us clues. I talk about the bonds all the time, right? So Powell comes out and says that. Anyway, the point is, it would have been nice to know that he was going to come out and speak. So that's why you need to pay attention to the economic calendar. So let's take a look. Let's see what's going on this week. Okay, so we have Europe, GDP. Okay, that was all today. Okay, so that's all over. 6:30 p.m. today. Australia, retail sales. They have their rate statement at 9:30 p.m. tonight and their interest rate decision. So again, Aussie pairs, anyone that's an Aussie, perhaps the ASX, this Australian stock market, can be affected by something like that. Typically, when all these central bankers come out, just like everyone else, they all follow each other. But I don't know. I mean, I don't follow the rates in other countries. I only follow the one in this country. And, so you have to pay attention to that. But typically, they like to follow a lot of times. So that's coming out tonight. Can certainly affect that pair. Tomorrow we have German retail sales. We also have the ECB bank lending survey. Okay, those are not important. We have for the U.S. ISM manufacturing PMI. Again, these are not major numbers. Employment change for New Zealand. These are not unemployment rate for New Zealand. Again, that's not a big market mover in terms of the world. Then we have Royal Bank of Australia, Governor Lowe speech. All right, okay, not a big deal, not really a big deal there, unless you're into like that, Forex stuff. On the second, we have Europe, the consumer price index and consumer price core, and then the index year over year. Those are not major market movers. We have ADP employment change. That is like a preview of non-farm payrolls. So that can be a market mover intraday, possibly. It can move the S&P around a bit. That's more important if you're like a day trader. All right. Australia on the second, trade balance. Again, that's not, no one cares. All right. On the third, we have Great Britain, Bank of England, minutes, Bank of England, interest rate decision and their rate statement, right? Looks like they're going to have their rate hike, whatever. There's a bunch of Bank of England items in here. So they're going to have their monetary policy summary, and the Governor Bailey's going to speak, right? That's all on the third. That probably comes out somewhere between 3 and 4 a.m. Eastern time. I don't have the exact time on that, but if that can certainly affect the pound. Or things that are crossed with the pound. So that's certainly something to keep an eye on. And then also on the same day, on the third, we have the European Union interest rate decision, all right, and all that stuff. And they're going to have their press conference. Again, that probably takes place around 3 or 4 a.m. Eastern time. You want to double check that on your own, in your own time zone. But those are somewhat global market movers, okay? The European, especially the ECB. So want to keep an eye on that. If there are any surprises in there, it can affect the S&P. It can affect everything. So just something to keep an eye on. Then we have ISM for the U.S. on the third. ISM services PMI. Okay, that's not a big deal. Then we have Royal Bank of Australia. They have their monetary policy statement on the third. I thought we just talked about that earlier in the thing here. Okay, why is that on the third? Okay, it's on the third. That's where it is. No, they have a rate statement on tonight. So, all right, that's strange. And then it says again on the third. Anyway, no one cares too much about that one anyway. On the fourth, we have Europe retail sales. Man, there's a lot of stuff going on this week. And then we have on the fourth, which is Friday, non-farm payrolls. Okay, again, that item right there is the whole reason why I checked this calendar. But besides FOMC meetings. Non-farm payrolls is the most important scheduled piece of economic news we can get. That's at 8:30 a.m. Eastern time on Friday. And then we have, for the Canada, net change in unemployment rate. Okay, no one cares. So NFP. The reason why NFP is so important is because it can change. If there's any negative news or whatever, any dramatic news, it could move markets in a dramatic way, right? The S&P, the NASDAQ, all that stuff. If you're in a stock, the stock can get affected. So it's important to be aware. Also, more importantly, when you have news like this coming out, the market tends to behave in more erratic ways going into the news because large players don't want to take the risk going into the news, or at least people that don't have the inside information don't want to take big risks. So the market tends to, volume tends to get smaller, and moves tend to get more muted because they're waiting for the news, right? They're waiting for whatever. So that's something to keep in mind as well. All right, so NFP, important piece of information right there, and that's on Friday. So there's a bunch of things this week. We have ECB, rate decision, pound rate decision, and US, we have the non-farm payroll. All right, so let's move along here. Let's get to my Bitcoin analysis. And let me say hi to a few people first. I sound like a radio announcer today, right? All right, so Steen, hey, my student, Steen, how are you? Elizabeth, good to see you. Freezing in Boise. Well, I don't know if it's worse than Jersey. It probably is. I mean, it's like 12 degrees here at night, which is not my favorite, that's for sure. I'm moving to Miami Beach. Anyway, Kamal, all right, good to see you. Cool. Thanks for stopping by. Sean, all right, thanks for stopping by. Great question. I'll get to that. Chris, good to see you. Got Wedge, Bill there. Bill, I got your email, and like I said, I'm behind a couple of days, but I'll catch up. Just be patient. Peter, good to see you. All right, cool. Sure, NEM, we'll get to it. Kai, good to see you. All right, hey everyone. Winter, where's Schwartz? I don't see Schwartz. I'm gonna have to cancel this stream. No, I'm joking. Okay, let me see. Kim, All right, from Argentina, good to see you. All right, David, good to see. I'm moving there, David. Yeah, I'm joking. I want Miami Beach, not Miami the city. I visit you in Miami, but Miami Beach. Okay, Anthony. Hey, good to see you. All right, hey Dan, good to see you too. Thanks for stopping by and saying hello. Anthony, is that Anthony from my Irish Anthony? All right. So let's get into the Bitcoin situation here. So if you looked at I wrote an article on TradingView yesterday, and I talked about the two other scenarios, right? Because what I talk about a lot is what people don't see. All the fake gurus and everyone out there, they like to react to what you see. So they look at stuff on a chart and they'll say, oh, look, there's a lower high, double top. This thing is going to go to 25,000. All this other nonsense, okay? I'm not going to sit here and make fun of them all day. You know how I feel about that. But the thing is this. The recent structure, as you all know, is lower highs and lower lows, right? So the structure is bearish. But we've reached a long-term support, right? And this is what I spotted and I talked about on my TradingView article. This is the weekly chart right here. Okay, what do we have here, students? What do we have here on the weekly chart? Here comes my Seinfeld impression. What do we have right here? It's not the best example of one, but what is that? What is that? I'll wait a couple of seconds for you to answer. I know there's like a 30-second thing here. Oh, Anthony, Australia. Okay, I got the wrong Anthony. I got Anthony's all over the place. Anyway, what is that, people? What is that? A lot of people are on this lesson too. Right? We have a bullish pin bar. Now, this is not the best example of a bullish pin bar because the open to the close should be smaller, but something like this, sometimes it's okay to make an exception, especially on a weekly chart when you have a long tail. Now, Elizabeth, I'm talking about the pin bar. You can argue it's a double bottom on if you look back and you want to compare it to this low over here, it's not exactly it's not an ideal double bottom, but yeah, I can see why you would say that. I would agree with that. But I'm picking on the pin bar here. The pin bar. The pin bar in a very attractive location. Why is this attractive? Well, look at it. If you compare it to the low over here, that's actually more like a failed low. All right. It's not the it's not the exact definition, but it's the same idea. And we have a bullish pin bar. That when I saw that on the weekly, I said, yeah, this is a really bad place for shorts, for sure. Okay, and it's trying to take out that pin bar high, which would be a buy signal on the weekly. So that brings us back to the daily chart. And on the daily chart, this is where people are going to go wrong. Okay, because they're focused right now. All your fake gurus and all your whatever you want to call them, self-appointed authorities, they're all focused on this because, they're watching their 4-hour chart and their 30-minute chart, and because I'm an expert, right? I've been doing this for 2 years. I'm an expert. So they're looking at this and they'll be like, yeah, lower high, it's going to go to 25K. Right. And that's partially true. We have the lower highs and the lower lows. This is where things can get confusing. Which side do you believe? Do you go by the recent structure of lower highs and lower lows, or do you go by that bigger picture pin bar? Well, the bigger picture is a longer time frame support, right? And it's now conflicting with the shorter time frame momentum. So what it means as far as timing markets is this. This area right here, this entire area, is a high probability area for a reversal over the next week or two. Okay, that's what it means. Now, doesn't guarantee that there will be a reversal, but if there's any place to look for one, and if a buy signal shows up in this area, and those are the two scenarios I was pointing out on my TradingView article, the double bottom, okay, over here, if we get a buy signal off of that low, or we get the higher low, okay, somewhere in here, which is what, around 34,000, 35,000. Now, keep in mind, if the market makes such a move, then you're going to have a lot of people opening their big mouths, calling it a short, blah, 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 blah. For a day trade, I agree. I would be looking for, as a day trade, I don't day trade Bitcoin to be clear, but if I was going to, I would be looking for shorts, right? Because here we are at a lower high resistance area, and I agree with all that. This is a lower high resistance area. That area right there is likely to turn into a resistance. Why? Students, you know why. Because we can get the role reversal or inversion there, right? So I would, as a day trader, I would be open to the idea. But as a swing trader, definitely not, because of that pin bar on the weekly. So as a swing trader, I would be preparing for the higher low for a long or a double bottom for a long, okay, not shorts. So I just finished talking about a short argument, but you understand the time horizon expectations are not the same. Risk for a day trade is not the same as risk for a swing trade. The swing trade risk at these levels on the short side is just like the swing trade risk on the long side back at 69K up in here. Go back to my streams, right? Back at that time, what, December, November? And what was I saying? If you go back, what was I saying? Risk is extremely high for longs at these levels. You got to be nuts to be buying at these levels, okay? And I was looking at the double top potential, and there were all kinds of problems that I was looking at. We had these projection levels here. We had all kinds of stuff. And then the market started to react, right? My point is the risk and the probability. I still wouldn't short Bitcoin, but the thing is, there is no way I had any interest in going long at these levels. I was trying for the longs when it pulled back into these support areas, right? As you know, they got stopped out. But since then, it's like I'm staying away from this thing because this thing's got lower highs and lower lows and the momentum's bearish. I want to wait for that momentum to change. We are now at a level where that momentum may establish the change. So the change isn't there yet. My point is, be prepared for the change. If the change develops, you should know what to do, especially if you're in my training program. You should now know what to do. The idea, market timing, correct market timing, or I should say effective market timing, is about being ahead of the market, not reacting to what you see. You see, we bring that with us. In a regular real environment, it's natural for us to react to things, right? Like, you look outside and it's going to rain. So what do? You get an umbrella, right? You're reacting to the environment because, oh, it's going to rain. All right. So we bring that reactive mentality into the market with us, and we think, oh yeah, right. Oh, I see this, so I'm going to do that. But it's ineffective, right? So what you need to do is be ahead and say, oh, I'm prepared for the higher low. I'm anticipating it. If it shows up, if it confirms, I'm prepared and I'm going to go long, okay? So right away, you're ahead of the herd. While the herd is all shorting this thing, thinking, yeah, I'm going to make $1 billion because I'm shorting Bitcoin because I'm sophisticated, right? Without doing that, you're taking the other side of that trade, and when they get squeezed, that's where your profit potential is, right? Okay, so that's my Bitcoin evaluation, and basically explaining my assessment that I wrote on TradingView as well. So as a student, you should be able to follow my analysis even more closely now that you know exactly what I'm looking at, okay? And I don't have to explain a lot of things because you're going to know where I get this stuff from. All right, so that's Bitcoin. Now, let's start getting into your questions because that's the whole thing. All right, it's a pretty decent time. So let me start looking over the questions here. All right, Elizabeth wants to see Ethereum. Let's take a look. So actually, let me pull up my Ethereum chart. And by the way, this Bitcoin situation is going to affect a lot of the altcoins, as you know, because many altcoins follow. I hope you realized by now that this game is a game of losing, okay? I hope you realize that. People are losing? I'm not here to lose. Well, if you're looking to win, then you will lose, okay? You have to look at this as a game of losing so that you can be more defensive and protect your capital. Winning will then be a byproduct of that, right? But if you focus on winning, you're not going to win. This is a random environment, right? So when you focus on winning, you invite all those emotions into the mix, and on top of all the other problems that we face, all the obstacles, your outcome will be the same as going to a casino, all right? And that's not what we want. All your friends and people say, oh, but that's not true. Altcoins are a great investment. My friend made $1 million. Right, those are called lottery tickets. And we have a lot of people that have gotten lottery tickets, okay? There's 8,000 of them in the altcoin space. And some of them pay off, but they're lottery tickets. There's no skill involved in picking some garbage coin buying $20,000 worth of it because you have $20,000 to throw away, and it happens to turn into $300,000, right? Because the market just happens to inflate because of the stimulus and blah, blah, blah. It just happens to come together. There is no skill involved in that. That's called a lottery ticket, right? So people get misled by that type of stuff all the time. And they think, oh, but there's something to this because blah, blah, blah. It's an isolated occurrence. It's an outlier, as they're called. You can't go by that. So what we want to do is we want to be able to isolate probabilities or situations, right? Define a scenario in advance that has a higher probability built into it based on the process that takes place in the order flow. These are things you cannot see. Okay, but for example, a double bottom or a failed low is such a process where shorts are getting caught, all right, and the confirmation comes, they're on the wrong side, they have to buy, and they get squeezed. That is the process that you're capitalizing on, and that's why there's a higher probability of that long trade working out. It's a process, right? It's a market process. So that's, as a retail trader, that's really the only chance we have, is waiting for those particular unique situations and having a very well defined set of rules to help us isolate those situations and then take a trade, define our risk and take a trade in those situations only. Most people don't do that. They just feel things out. They read the news. Oh, I'm going to read the news because I feel like I'm being informed. Right. So that's how people make decisions, and then they get stuck in hope mode. All right, enough of that rant. Let's talk about Ethereum because I like to talk too much. Elizabeth is like, when's this guy going to talk about Ethereum? All right, so let me pull up my Ethereum chart. Let's see. This is the chart right here. So now, as you can see, right, following Bitcoin, they're all bouncing together. And Ethereum, remember all that hype? Not just on Ethereum. Do you remember all that garbage 2 months ago? Cardano is going to 50x. All these other garbage coins. Do you remember? I hope you remember. Take notes or something. Not you, Elizabeth. I'm just talking about everyone. Because remember how I was ranting on those videos, one after another after another? Early investors are going to make millions and billions and blah, 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 blah. Where's the millions and billions? Right? All these altcoins got hammered, right? And that's a point that I was making 2 months ago, and the risk that you were taking. Now, there are a lot of people that are stuck in these things, right? From much higher prices. These supports should not have broken. They're broken. So we, just like Bitcoin, Ethereum has a series of lower highs and lower lows, right? We have a potential lower high that can develop there. Although at the moment, this looks interesting, right? People are going to get lured into this thing. Oh, Ethereum is strong again. And then you're going to have all your fake gurus come out and say Ethereum is going to 10K again. Do you remember that talk? Ethereum going to 10K. It's going to happen this time. Yeah, right. Okay. What's the low here? The low is 21.59. That's not 10K. So anyway, I hope you realize that 95% of this business or industry is fake, especially on YouTube. I hope you realize that. If you don't, you have some expensive lessons to learn. All right, so Ethereum, lower highs. At this point, I would be anticipating a lower high to develop, followed by the lower low. Of course, if Bitcoin can change its tune, because this is the same situation. We have an area here. Look at the supports that it's messing around with, right? Goes back to the October support, went slightly lower. I would say this is a decent amount lower. So we can count this as a lower low here. All right, this is not really a failed low. A failed low would have been tighter. Like a failed low should have been around here somewhere. So this went much lower, right? So that tells me that this momentum is still intact. And a test of the low is still likely over the next week, right? You can see a test of low or the higher low, just like Bitcoin. All that stuff that I say about Bitcoin, you can basically apply it to Ethereum. It's the same deal. If Bitcoin forms the higher low or the double bottom over the next week, I would expect the same out of Ethereum, right? So if you're looking for a buy signal, I think that would be the best place to do it. Right now is probably a bad place to do it. And people say, no, but that's not true. Look, it's breaking out, blah, 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 blah. Right, you're buying into resistances, right? You're buying into this old support. See this zone right here? Here. You can actually draw a box between these two lines, okay? I have this old support here, and then this lower line is the old support from back here, as you can see. That box represents a resistance zone, right, between those two supports. You better believe there are going to be people that will be happy to break even in that area, people that got long too early and bought too much of it, okay? So that's what I'd be anticipating from Ethereum until the story changes. And the story, what I mean by that is the chart needs to give us a improved look. As long as this structure keeps producing lower highs and lower lows, we have to expect supports to break, or I should say anticipate supports to break and resistances to hold until it proves otherwise, okay? So it may sound confusing, but price can come into an area, like I said, on the bigger picture that favors a broader reversal, but it doesn't mean we're going to get one. So it's about expecting one or anticipating one, and if the market delivers it, then we're prepared. If the market does not deliver it, okay, if we don't get that higher low or double bottom, this thing is poised to make a lower low. So you have to be prepared for that scenario as well, okay? That's why when a situation, when you're faced with bearish momentum like this, taking swing trades is a bad idea. For the most part, it's a bad idea going against it, right? Unless you're shorting Ethereum, which again, now you're in a high risk short area. This is where day trades would make more sense. But if you're not experienced, I would not recommend day trades, all right? So and again, it's all about, you say, well, why not? I mean, you know, a trade is a trade. It's about how you manage the risk. And day trades are they're not the same as a swing trade. Sure, the risk is tighter, but the problem is you can get stopped out a lot. So you really have to understand what you're doing, and you have to be very, very selective. And it's very easy to overtrade as a day trader. That's one of the biggest problems. And the costs will prevent you from making any money anyway. Right? That's why no one makes money. All these day traders, hey, look, I'm driving my Lamborghini next to my mega mansion, right? You know that's all fake. None of these people make any money, all right? Especially these ones that come out and they start pushing that lifestyle hook. They're not making any money. All right, so let me move on. Anyway, so thanks for asking, Elizabeth. Man, I spent a lot of time on that question. Okay, Kamal, good to see you again. Now, Sean, any weight to the cup and handle pattern on Bitcoin, 8-hour or 4-hour? All right, so let's just take a quick look at that. Cup and handle. Now, if you're looking at a smaller time frame, let's go to the 4-hour, right? Now, this is more appropriate for day trades, to get a sense of the bigger picture in terms of day trades. As far as cup and handle, no, I would not give that much weight because, again, the bigger picture levels are going to basically play into this, right? And you're still facing the same resistance. You have your little higher lows and higher highs. Great if you're in day trades, right? Great if you're only looking for a couple of 100 points. Great, great to follow. But once you start getting into this area here, I'd be anticipating reversals, right? So, and a bigger picture reversal. So that cup and handle, I would not give any weight to. If the broader structure, Sean, was bullish, then that cup and handle would carry some more weight. Does that make sense? So, the broader structure is bearish. So bearish patterns on your smaller time frame would carry more weight because they're in line with the broader structure. All right, anyway, thanks for asking. All right, hey, Chris, good to see you. Got all my students here. Bill, Peter. Okay, so Peter, can you please check NEM? Yeah, sure. So before I check NEM, you know what we have to check first, right? Gold, because NEM follows gold. What have I been saying about gold? All the people get excited, all the gold people. Gold's going to 2,000 this time. I know it. I can feel it. Yeah, right. Gold is still inside of this consolidation, right? And I warn people, don't be buying gold at 1830, 1840, 1850, 1860. Don't be buying gold. Where's the high here? It made it as high as 1853, okay? And it got hammered on what? The Fed announcement, right? The Federal Reserve says no more stimulus, people. and gold gets hammered. So here's the thing with gold. Gold is in a consolidation. We know it's in a wave 4, broad wave 4, very broad wave 4, which I've been talking about for Bitcoin, as you know, for a long time. I've been suspecting the wave 4. It looks like we're in the wave 4. Now, I don't get married to Elliott wave analysis because I know how subjective it is and I know how it changes, but I'm open to the possibilities, and if the market proves those possibilities in other ways, then it's like, okay, then I'll go by that and I'll adjust my expectations. Meaning, if I suspect we're in a wave 4, that means my profit expectations will be smaller. I'll only be looking for range lows or range highs and avoid trades in the middle. That's the situation we have with gold. Avoid trades in the middle. Where are we right now on gold? We are in the middle of the range. Okay, look at this. Look where we are. If I draw a line there, right in the middle. Okay, going all the way back. You want to go back? Look at this. Right in the middle. This is a bad place to be taking any type of trade. Even though there's a bullish pin bar there. You say, oh, look, but there's a bullish pin bar. It's a higher low, blah, blah, blah. Right. Relative to the smaller structure, right? Relative to this structure right here. But in the scheme of the bigger picture, that structure is meaningless. So you have to understand what's in play. That's why I tell my students, you need to define trend over 3 time horizons, right? Long term, mid term, and short term. This right here, this box, would be short term, while your mid term or long term would be range bound, okay? Range bound. So in the middle of this larger range, right, you had this little bullish movement, which again lures lots of longs because they have no clue what they're doing. And they'll see a pin bar like this and go long. So you asked me about NEM, I'm talking about gold. The reason why that's important is because NEM is going to be affected by this. All right, so let's take a look at NEM. I would suspect that gold at this point can go either way, right? It's in a 50-50 area. It's in the middle of the range. It may pop up a bit. So for something like gold, you're either looking to short the range high, right? Or you're looking to buy near the range low. Now, if we zoom out on gold further, we'll see that gold is generally in a bullish trend. So shorting the range high is going to carry more risk, which means your expectations should be smaller when you do it. Let's take a look at the stock. So here's NEM, okay, Newmont Mining, which is going to be affected by gold. So Newmont has, see, the stocks tend to behave slightly differently because they have other things going on, right? They have other things that can affect their price, not just the price of gold. So you have this situation here where, let's take a look at a weekly chart of Newmont. I mean, gold is range bound. Look at this chart on Newmont over the previous year and a half. That looks like a consolidation to me, right? So we can say long-term bullish, mid-term range bound. The short term looks stronger, slightly stronger than gold, but don't get mixed up by that. Okay, so basically, if you're interested in like inventory for something like this, and these stocks are good for inventory, I would be looking for range lows. We weren't, look, not too long ago, we were at a range low, right? 54.79, that area. Right now, this thing's at 61.14. So this area, mid-50s, this area would be a much better place to accumulate some Newmont Mining if you can get some. If you have some from that price, this would be a good place to get rid of some. All right, it's the middle of the range again. So, in this situation, it might go higher, it might not go higher. You have a resistance up in here like this, in that area right there, and you're going to be affected somewhat by gold. So this would be, if you're in from the low, this would be a great place to distribute risk. If you're not in from the low, this is not a good place to be buying Newmont. This up here would be an area to get out of more if you had some. And shorting it, like I said, is going to be risky because the general trend is bullish. And if there is a breakout, you don't want to get caught in that, right? So the higher probability thing to do would be to buy supports or buy near the range low. So that's what I have to say about Newmont Mining. It's very important to check that bigger picture when it comes to these type of stocks, because there's other things going on here. You have to, they're going to be affected by something like gold. All right, and gold is fighting the dollar. You have to realize that too. Let's take a look at the dollar real quick. because whenever you're dealing with gold, look at the dollar. Look at the dollar. All right, breakout on the dollar, and it's failing. Check this out. It's failing. That's a failed breakout. But is this a good time to be bearish on a dollar? The dollar is just noisy. All right, back here when the dollar broke this support, I wasn't convinced that this was there's nothing bearish about it. It produced that higher low eventually. But when it broke this support, people, hey, dollar's bearish now. Dollar's bearish. The dollar, in order for the dollar to be bearish, we need to start taking out some significant supports. You have one over here. As you can see, well, look, old resistance, new support, pin bar. What a beautiful long that would have been. Of course, we can see this after the fact. But when I talk about, to students and I'm asking them to produce these type of charts, that's what I'm looking for. I mean, what a beautiful trade that could have been. Forget that this is a dollar. If this was like Bitcoin, right? That's what you want to see. You want to see that pin bar in such a location. But my point is with the dollar, it's got to break these supports, these lower supports, to even be thought of as changing bearish. And the Fed is obviously going to do things that are going to support a stronger dollar, not a weaker one. So, the Federal Reserve basically runs the world, and if they're going to be producing a rising rate environment, or they're going to be taking money out of the system, that's only going to put bullish pressure on the dollar. So even though we have a failed high here, I would not be looking for shorts. I'd be looking for another higher low somewhere in this area and continuation of the bullish trend, right? And with that being said, I don't know how gold is going to do well in such an environment. That's why, so that goes back to Newmont mining and gold. All right, so those are important things you need to keep an eye on. Thanks for asking. All right, Kai. Oh man, I'm talking really long today. Kai, KNC USDT. Let's take a look. KNC, what is that? Let's take a look here. All right. So first thing I want to look at when I'm not familiar with a coin, because I'm not familiar with this one. And that's another nice thing about the program. Some people pull up some of these markets that I'm just not familiar with, and it's good to see that variety. So here's KNC on the weekly chart. As you can see, the midterm trend I would classify as range bound, right? You have this range bound situation going on right here. While the broader trend, you can argue this is a range low, and you can argue after this higher high that it's basically you're in a higher low area. So generally the trend is bullish, but you're inside of this range right now. So what does that mean for any short-term ideas? Well, first of all, you're near this range high, right? Look at this here. You're near this range high. Look at the pin bars, or look at the tails on these candles over here. So obviously someone is getting out of something there, and price is trying to work its way back into that area. Do you think this is a good place to buy? I wouldn't. No way. This is not a good place to buy. If you're in it, this is a good place to consider taking profits, right? Taking money off the table if you have some. Otherwise, look for the range low, okay? Again, you don't have a clear trend here at the moment, which means waiting for something like, oh, I'm going to wait for the higher low, and I'm going to buy at the higher low. That's assuming you're in a trend. This is not a trend. So if that's the case, then it may also be reasonable to anticipate a test of low or go slightly lower. Those would be your ideal prices for a long in this situation. Of course, you want to see confirmation on such a scenario. You don't want to just step in front of it. I don't have to tell you that, but people that are not familiar with my program and all that stuff, you can't buy into support levels or sell into resistance levels, or you shouldn't, without confirmation. I asked that question in one of my assignments, and would you believe some people told, they wrote back and they said, oh yeah, it's a good idea. Did you not watch my video? So no, it's not a good idea. A lot of people got it right, but some people, I don't know, got to pay attention to details. Anyway, not a good place for longs. I would wait for that pullback to the range low. Now let's take a look at the daily chart. I could see why you may have some interest in this. I mean, look at the little higher low situation here, right? But that weekly chart gives us a much different perspective, and it's important to respect that range. So if you're in some type of aggressive trade, maybe you got in on the buy signal here, there's this little aggressive buy signal, you're definitely going into an area where you should be considering taking money off the table, especially if your reward risk goes over 1 to 1. Like if you're at 1.5 to 1 or something, don't be afraid to take something off the table. A common mistake that a lot of people are going to make in this environment is they may get some stuff at some good prices, and then they're going to think that we're back in that stimulus environment that we had 6 months ago. We're not in that. So it's better to expect less, not more, okay, in this situation especially. Altcoins, as you know, are highly speculative instruments. These type of instruments do not perform well, right? There's a tendency for them not to perform well when interest rates are going higher because it makes sense. There's less money in the system. When there's a lot of money in the system, it looks for things to go into, right? And that's where you get bubbles from. And that's what the altcoins were. So now that the Fed is going against the situation and the Fed is no longer going to support this nonsense free money environment that we've just seen, these things are most likely, the majority of them, are probably not going to perform well. You're going to get some exceptions, okay? And those exceptions may be a result of very good marketing. Somehow they lure the herd into one because they make some kind of ridiculous promise or whatever it is. You know how the story goes. And you'll have one altcoin that outperforms, right? There's no way a chart's going to help you see that outperformance coming. If you're an insider and you know what they're going to do, then that's your advantage. Otherwise, you know, if you happen to have a good price, it pays to take your money when you're doing better than your risk. If you want to let some ride, wait for a sell signal. But those are the levels that you should consider. Right? Does that make sense? So thanks for asking about KNC. All right, cool. So let me move along here. Ah, from Portugal. All right, cool. Obrigado. That's all I can say. GRT, USDT. Let's take a look. GRT. I don't think I have too many people from Portugal. USDT. All right. So let's go back here. Let's take a look at a weekly chart. For coins that I'm more familiar with, I don't have to look at the weekly chart. But when I'm not familiar, first thing I like to see is the bigger picture. Like what's going on here? Where are we in terms of significant support and resistance levels? So as you can see here, this thing is basically, it's broken an important support. Not dramatically, but it's broken. You have a lower high. Look at this pin bar. Look at this pin bar on the weekly chart. Do you see why these things are so important? Look at this pin bar. That's a nice pin bar and a warning to get out of this thing if you're long. Anyway, but that's after the fact now. So here's what I want to say. Your nearest support, sure, it's an attractive area for potential longs, right? You're not at a resistance area, but you are going against the structure, lower highs, right? You're also fighting a generally weak Bitcoin. So if Bitcoin continues to break its lows, this thing is probably not going anywhere. And relatively speaking, let's go to the daily chart. You know, Bitcoin has that leg higher that it's produced over the recent few days. Look at this thing. This thing sucks. All right. This thing, while Bitcoin has run up maybe a couple of thousand points maybe, this thing can't even get out of its own way. So a lot of people like to think that they like to play that laggard game where they're like, oh, well, you know, Bitcoin's running, so this thing has to play catch up. No, it doesn't work like that. If there's no money flowing into this thing now, while Bitcoin is trying to rally a little bit, that means there's no money coming into this thing at all, and it's relatively weak. So if Bitcoin pulls back and makes the double bottom, for example, this thing is more likely to get hammered than to try to play catch up, right? It's relatively weak. This same concept you can apply to stocks as well with the S&P. I mean, that's where I got it from. That's one of the first lessons that I ever learned actually in this business is relative strength against the S&P. So yeah, I would not have any interest in this thing long, you know, for that reason. There are many better choices. I mean, you can wait for a higher low on Ethereum or something than get involved in something like this. I mean, look at this. It tried. Right, look at this pin bar over here. It tried, and you're going to have a lot of resistance in this area. So even if you get something going here, okay, you have to get through this area for the structure to even think about changing. That area right there is a high probability bearish reversal area. That's what I'd be looking for. So as far as longs, there are better choices out there. And that's really all I have to say about this thing. I'd be looking for lower highs and lower lows until it proves otherwise. Yes, you are at an attractive area, but that doesn't mean it's going to reverse. And you're probably, in order for this thing to put that reversal in, Bitcoin's going to have to prove itself. Another thing is, you know, if you believe in this thing in the long term, then the more effective thing or the more conservative thing to do would be for it to establish a reversal structure in that area, meaning it's got to put in a nicely pronounced higher low, something like this over here. Look at this higher low situation. You see that right there? You want to see something like that, okay? We have nothing there yet, so something to keep in mind. All right, anyway, that's GRT. Thank you for asking. A lot of these altcoins are going to be in the garbage zone. A lot of these altcoins, the party's over. You don't realize that these things are to make developers rich, not you. Okay? Promoters get rich on this stuff, not you. They need you to help them get rich. So these coins, they're highly speculative, and most of them are going to go nowhere. Right? Please understand that if you're thinking long term. There may come a point where money starts flowing back into these things, and the structures will change at that point. But buying more and more, thinking, oh yeah, I'm buying the bottom, right? As it goes closer and closer, I'm buying the bottom. Oh, it's at zero. I'm buying the bottom at zero. It's below zero. I'm really buying the bottom. Yeah, that's what can happen with these things. So there's no hurry. Wait for the proof. And in a rising rate environment, chances are these things are going nowhere anytime soon. Understand that. All right. So, and that's like I wrote in my article. I'm not a big advocate of placing trades or using fundamentals for trade ideas, especially because I'm more short-term oriented. But when there's something major, like a major fundamental force that's in play, like interest rates, it's something you need to consider as far as future potential. If the Federal Reserve changes their mind, anything is possible, and Powell comes down, I over hiked the interest rates once again because I make mistakes, I'm going to lower them. Then you're now you're going into an environment that would be more friendly to these things, and you could see another bubble and all the fake gurus with their 50x videos coming out again, right? All that kind of stuff. But until you get that type of environment, these things are not poised to do well, right? They're not poised to perform, which means you're better off probably staying away from them or just being very patient with them. All right? If you really believe in a project, at least, you want to accumulate some, take a small position, but it would be more effective to wait for the structure to change. And that structure will happen in Bitcoin first. All right. So anyway, good question. Man, I'm slow today. I am talking so slow. Like, people are leaving the chat as I speak. All right, Elizabeth, we can get an extension on Totally Worth It, by the way. Oh, Elizabeth, thank you. So Elizabeth, as far as the program goes, after the 14 days, you actually have the next 14 days. You actually have a full month of access in case you want to go back to certain assignments, or if you want to do something again, or if you're just running behind on the schedule, you actually have an entire month. It's just the program is delivered in 14 days. So you can look at it that way. Also, I know you had a question about the second assignment. And I saw your Elliott wave thing, and you had not answered the second assignment. This is supposed to be an arrow that you're supposed to be able to click on, and it's supposed to take you to the second half of the assignment. A lot of people have been missing it. Obviously, that arrow is not clear, so I need to fix that somehow. I got to see what the story is with that. But anyway, yeah. So you have the whole month to go back and do stuff. And if you want to resubmit something, or if you have questions or whatever, you can send me private messages through the platform, all that kind of stuff. All right. Good question. And thank you for the kind comment. Okay. No problem, Bill. All right, David. Okay, from Miami. Magic, all right. I love Miami. Kai. Okay, cool. I appreciate that. Cool. I'm getting some nice comments here. All right. Okay, this was like an hour ago. Gotham, hey, good to see you from the Bay Area. How are you? Haven't seen you in a while. No, what do you call it? No TradingView coins. That's okay. You don't have to send me any. I'm only joking. Those coins aren't really worth much anyway. I'm joking. All right. So let me see what else we got here. Just going through the chat, looking for symbols. All right. Okay, so what I have here, Super USDT. All right, let's take a look. What is that? USDT. I'm not familiar with that. This is on the daily chart. All right, man, these charts don't look good, man. I'm sorry, I have to tell you. Let's just go to the weekly real quick. Look at this mess. Okay, look at this. So you have, everyone got stuck in here, right? That's where all the hype was. I hope you're not stuck in this thing. There's a lower high over here, and this thing's breaking supports. You had an old resistance, new support right in that area right there, and it failed. You see this? This candle right here on the weekly, that's when Bitcoin had that break. That's not a sign of strength, okay? That is a continuation of bearish momentum. So as far as longs, no way, not interested. You have, it's trying to hesitate in this old area right here. You can argue that there's some support in this area here, but it doesn't guarantee that it's going to hold. When you have bearish momentum in front of you, this thing is more likely to produce lower highs and lower lows unless it proves otherwise. Now, look at the situation compared to the Bitcoin move. Look what it's trying to do. You can argue with me and say, but that's a double bottom. Yeah, it's a double bottom within a bearish structure, right? So it carries less weight. Yes, you have a bullish pin bar here. You have some reasons to go long, but understand, if the environment was more favorable, I would say, yeah, that's worthwhile, but the environment is against you. So taking something like this, you have some things in place. You have a support, you have a double bottom, you have a pin bar, but what you don't have is the structure, right? The structure is against you. So that's an important piece of context that a lot of people don't realize. So if you want to take an aggressive long, if you're interested in the swing trade long aggressive, you know, this thing has some room to go up to this resistance here, right? That's what you're looking at. And it can easily fail at that resistance. And that's where you'd have to be taking your profit targets and all that other stuff, right? So that's your potential right there. And if it breaks these lows, right, if you take this pin bar, break of the pin bar high, and you're looking at, what is the low there? Like 59 basically. What's this low here? 55 cents. It goes below that, you need to take the loss and get out because this thing is more likely to go lower, right? You're going against the momentum. Does that make sense? So that's Super USDT. A lot of altcoins are going to look like this, by the way. Hopefully you didn't get caught at the top. There was a lot of hype in these things and they sucked a lot of people in at the top. Gotham, QYLD. All right, let's take a look. QYLD. By the way, if you want to press the like button, I guess that kind of helps. I'm going to make some YouTube improvements, by the way, once I get through I finish my training program. Man, that training program is a lot of work when I have to evaluate people's assignments. You don't realize how much time it takes. All right, so what is this here? Global X NASDAQ 100 covered call ETF. Wow, the hell, I've never even heard of this. Interesting. So it's an ETF based on covered calls. I'd rather just do the covered call, but okay. I mean, how do they even come up with this valuation? All right, forget that. Let's just look at the chart. So again, you have a similar situation here, right? The markets are trying to rally. By the way, let me just take a quick look. Speaking of the NASDAQ, let's take a look at the NASDAQ. Look at that. What an amazing move. What is this thing at? 14,891. Okay, what a bounce. By the way, I'd be looking to short this bounce around this area right here. Let's take a look at the S&P real quick. Okay, what a bounce. Right back into resistance. How much is it? 79 points. That's a big move for the S&P. You know, I remember about a week ago when we were pushing these lows here, what was it? Hey, the stock market's over. Blah, 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 blah. And what was I looking for? Longs. Okay? Not looking for shorts at lows. Now I'm looking for shorts. Now is a place to be looking for shorts. Not at this moment. There's no sell signal there. But this is certainly a level. Okay? We have old support. We have old support over here. We have old support over here. So I mentioned all this because you're talking about an instrument that's relative to the NASDAQ, right? So let's go back to that QYLD. QYLD. Man, every time I notice, every time I do like a rant, my viewers go lower. I guess people don't. Man, it's like almost at zero. Look at this thing. All right. Anyway, yeah. So this situation, if it's following the NASDAQ, I would be open to the short side. I don't know how you would short something like this. It's confusing to me how this chart is based on a covered call situation. But if you're just going to use the chart by itself, yeah, I would wait for a sell signal somewhere in this area. You got some room to play with here. So I mean, if you're taking aggressive, this would be a super aggressive long to buy after such a candle, because now you're getting into support. So I wouldn't know what to say about this. It's like a 50-50. Right there, you know, I wouldn't say much more about that, but I'm certainly bearish on the NASDAQ as far as waiting for the next resistance. And I mean, I would, instead of a bull call, they say covered call. Is it a bull call? I would be interested in a bear call. You know, you buy a call and then you sell a, I'm sorry, you can sell a call and then buy one above it, right, and collect premium, or you can buy a put and sell a put below it. I'd be interested in something like that. All right, but anyway, okay, so NUSI, what is that? NUSI. Is this the same situation? Nationwide NASDAQ Risk Managed Income ETF. Oh, these are weird instruments. Not familiar with these at all, but they're all bouncing, like the NASDAQ. Look at that. They're all basically doing the NASDAQ. So as far as longs go, you're in this bounce attempt. Just be careful, because you're going back into this resistance area in a market that's broken supports, okay? So using these type of instruments, I would still be interested on the short side. If you're very aggressive, you want to try to go for a long on something like this, if you could squeeze a little money out of that, okay, just understand what you're getting into. Right? I don't like these instruments. I'd rather just work with the NASDAQ outright, because, you know, it's very clear to me how that thing works. Anyway, good question. And thanks for pointing out these instruments. All right, so just going back here. All right, that was a question I asked like 3 hours ago. All right, hey, Adrian, good to see you. David, good to see you. All right, Alex, I totally forgot about, oh, okay, cool, no problem. Schwartz, there he is. Schwartz, I almost canceled my stream because you weren't here earlier. I was like, man, I can't do the stream without Schwartz, my international man of mystery from Romania. Kai, all right, in a way the market is, people who know the weakness of man prey upon, yeah, you know, Kai, they know the psychological patterns of retail, etc. Right, Kai, what you just described there, that's the nature of the market, right? The market basically is about transferring wealth from those who don't know to those who know, right? And when I say those who know, that comes in many forms. It could be inside information. It could be people who recognize psychological patterns, like that's what we do, stuff like that. But that's the nature of the game. The market is just basically one big casino. And people follow like their human intuition going into it, not realizing that our intuition is not good for random environments. It's good for real environments, right? Not random ones. So we think we see things, we think we know better than we know, we get lured into illusions of control and all kinds of other things, and basically it's just a way to separate us from the money, right? Just like when you go to a casino and you buy chips, you're giving away plastic chips, you're like, it's just a chip, right? But that chip was, you know, $1, okay, or whatever, or $5 or $10, but psychologically, it's much easier to give away a chip than a dollar bill. Anyway, all right, so the market's the same kind of way. Thanks for mentioning. Schwartz, oh, okay, no problem. Look, being an international man of mystery, I'm sure you got a lot on your hands. Very busy guy. Steen, when a stock is at all-time high, could you use fib levels above 1? Yes, Steen, that's a good question. And I didn't cover that in a lot of detail in my program. I may have mentioned projections, but you can use projections in that case. And let me pull up my Bitcoin chart. Okay, so these levels that I have, if you notice on my chart here, I have these dotted lines, right? And they're not the same as the solid lines. The dotted lines represent projections. They're not retracements. So, you know, projection, you can basically use a structure that's in place and project fib levels into the future. And I'm only looking for really the 618s and the 618, the 1618, the 2618. That's what these are. And you have to measure 3 points. So I'm not going to go over all those details here, but basically to answer your question, yes, you can use fib projections, which is a tool. You have a tool here on TradingView. This is the retracement tool, but there's a projection tool, right? If you look here, where is it? It's right. See, trend-based fib extension, they call it. But you can use that tool to project levels. But again, it produces a lot of lines all over the place. You only want to stick to like one. All right, so good question. David, Link. All right, oh, I haven't heard from Link in a while. Let's see what that mess looks like. How's Link? I remember all the hype on this one, right? Ah, Chainlink. Chainlink's going to go to the moon. Chainlink is going to be the next blah, blah, blah. Blah, 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 blah. Not quite. Chainlink is going to 50x by next week. Early investors are going to make billions of dollars. Not quite. So, Chainlink broke this support, right, on that Bitcoin break. Man, that is a nasty break. A lot of people got caught in that hype, I see. So since then, look, you have the same situation as Bitcoin, right? It's trying to put in a failed low. You see this? Relative to this low back here, you have a failed low situation. But I would not chase this thing, right? These altcoins, party's over for most of them. If you're interested in a bullish reversal type situation, wait for the same two scenarios that I talked about with Bitcoin, the higher low, the double bottom. It's important to keep an eye on the bigger picture and Bitcoin, right? Here's the weekly chart on Chainlink. So you are at attractive levels generally, and this midterm trend is range bound, you can argue, right? While the long-term trend is still generally bullish. So it's not a bad area for longs. You do have this bullish weekly pin bar, just like Bitcoin, right? That's that failed low that I just pointed out. It's the same situation. So you have some potential there. You just have to keep your expectations very low. I would consider that an aggressive trade. All right, if you manage to get like the double bottom or the higher low, I would be expecting Bitcoin to be producing a similar pattern. If you manage to get into something like that, don't expect that this thing is going to break this high. All right, instead, it would make more sense to be looking to exit right around this area right there. All right, that would be how you measure your profit potential relative to the risk you have to take. The risk is more important than the profit potential, by the way. Right, so that's really what you need to focus on. And then the profit potential is an area where you could say, okay, if the market can get into this area, which is within reason, then it makes it worth my risk. Okay, that's it. That's all you need to know. And that's it, right? People focus on the profit. Oh, I'm going to draw a projection. And, oh, look, the 2618 is like 1,000 points higher. I'm going to hold for that. Right, but they don't realize we're not in a favorable environment anymore. So you need to be more conservative. And you need to focus on, well, how much am I risking? And if this thing goes the wrong way, how much am I losing? Right now, you may get the lower high. So there's no reason to buy this thing right now. Does that all make sense? In fact, you're at an old support here, possible new resistance. If this candle closes like this and takes out the low of the current candle, you get a sell signal in your face. So I would just wait on that one. Does that make sense? All right, let me move along here. I'm getting behind because I talk too much. Thanks for asking. Stian, CHZ USDT. Stian, how come you don't send me any CHZ USDT charts? Or maybe they didn't fit the assignment. All right, let's take a look. So look, a lot of these coins, again, same story. Let's take a look at the weekly. Look at this mess. How many people got caught in this? So there are some attractive things, just like I pointed out, right, with Chainlink. Range low, okay? Pin bar at range low. So you have a potential buy signal. In fact, I think it took out the weekly high. So you have a potential buy signal, but it's aggressive. You're fighting the structure, right? And your resistance is right. That would be the midpoint of the range right there. What price is that? Around 35 cents, something like that. So if you get into a swing trade, you're basically looking at, oh, look at this area here too. You have all this old support right here. You better believe that's going to give you a hard time if price can get into there. So you have this zone right in here, right? Let me point out this little zone here. When you can draw a couple of levels like that, you have a zone. And inside that zone, you can anticipate selling activity. So that would be a great place to be taking profits, right? And a great place to measure your reward from in terms of risk. So if you use this pin bar to define your risk, this is a weekly, by the way, 1580, right? 15, just below 16 cents, 1580. It goes below that low, and you're long from 18 whatever, so you're losing like 3 cents or something like that. Obviously, you need to make more than 3 cents for it to be worth your while. And if this thing goes to, what is it, 23 cents? So, I mean, based on that first resistance, it looks like the reward risk is somewhat reasonable, but you need to be on top of that, and you need to, take those profits if you manage to get it. Again, it's a lower, it's aggressive because you're fighting the bigger structure, all right? Understand that. When we're in a more bullish environment, like we've seen previously, when we're getting higher lows and higher highs, and Bitcoin's making higher lows and higher highs, and you get this type of reversal pattern, then you can be more aggressive or more loose with your targets and expect more from them. But in this situation, I would expect less. All right? Doesn't mean you have to avoid them altogether. Just understand what you're dealing with, all right, and the limitations. Thanks for asking about CHZ. All right, let's see what else we got here. Thomas, can you speak on managing inventory when stuck? Oh, okay, Thomas, sure. Would it make sense to use swing trade to scale out? That's a good question. So, stuck. I know a lot of people, I'm sure, are stuck from like levels like this, right? Because you got sucked into the hype. I hope you learn your lesson on the hype. That's the first thing. The second thing, as far as inventory, if you're stuck, there's no reason to keep putting on more. We're not in a supportive environment, and the environment is probably not going to improve anytime soon. So with that being the case, if you're uncomfortable, then the idea would be to try to lighten your load, right? Try to lighten the risk, reduce the risk. And the way to do something like that is manage the trade like you're in a swing trade. That's a good analysis, or a good analogy, I should say. If, like an example, like CHZ, if you're in from a much higher price and CHZ makes it to a resistance, that would be a good place to unload some at a loss. But it's an improved loss compared to where it is now. As far as buying more, if you want to swing trade as a separate position to just try to make some money back, okay, I mean, you can do that as long as you're sticking to the rules, but keep in mind, it can also generate more losses, right? Especially since you're going against the momentum. If you can short, and you want to short swing trades on the side of the momentum, that increases your probability somewhat. So you can think of that sort of like as a hedge. I don't want that to be too confusing, but you're long inventory and you want to take short swing trades, whether it's a separate account or a separate position, whatever it is, doesn't affect your inventory, then it allows you to at least make some money back if you're right, on the right side of the structure. Does that make sense? So, I mean, that's how I would treat something like that. It's definitely more sophisticated. If you want to keep things simple, then the idea would be to not add more inventory and to try to reduce inventory whenever you get these little pop-up attempts like we're seeing right now. If the structure changes, then that changes the whole story. But until then, I think it would be better to be more conservative. A lot of people are going to see these low prices and they're going to buy more, thinking, yeah, I got a low price, inventory, right? But we're not in a supportive environment, so lower prices are likely to follow, not higher prices, and people get too big too fast, and we know what happens. So I hope that answers your question. All right, let me move on to the next one. Okay, so that was the inventory question. Stian, what are your thoughts on staking USDT at 7% instead of... Okay, so staking USDT 7%. Here's the thing. I don't trust those staking things. For one, I don't know enough about them. All right, and obviously they're trying to be more attractive. They're trying to attract capital more than like something that's guaranteed, like a treasury note. So I don't know what the risks are as far as can they run away with your money? Is your money locked up for some period of time, like 7%? But when? 7% a year? 7%, every 6 months? What's the period? And what happens if they, is there an exchange where you have to lock that up? And what if the exchange closes or they change some other kind of rules? Do they run away with your money? If that's the case, then I would look at that type of staking as still highly speculative, and I would not put a lot of money into that. You want to, put a couple of $1,000s and they run away with it. All right, whatever. $10,000. All right, it sucks, but okay. But I would not put $100,000 into something like that, and they run away with it, and they're like, the U.S. government's not going to run away with your money, right? If you buy Treasury notes or whatever, Treasury bills, they'll pay you back. And if they can't pay, they'll print the money and they'll send it to you, right? You don't have to worry about the government running away with your money. But staking, I don't know. Okay, again, I don't know enough about it to really answer that question. But those are some questions that you should pose to whoever is offering you the staking opportunity, whether it's USDT or whatever. All right, so thanks for asking. It's a good question. Kim, what are your thoughts on... Oh, man. Kim, are you serious? NFTs are a byproduct of too much stimulus. When you have people buying a useless, worthless graphic for $40,000, there's something wrong with the system, okay? I understand the rarity thing, and I understand it from the artist perspective. If you're the artist or you're the musician or whatever, and you made this work and you want to sell this individual piece of work to someone who's willing to buy it, I totally understand that, and it gives the artist more control over their content. Sure, I understand. But if you're one of these morons who's on these websites and they're saying, hey, you're going to get rich with NFTs and blah, 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 and you buy this one for $1,000 and you're going to sell it for $10,000 next month, you're going to get stuck with a lot of worthless graphics, okay? Because those, first of all, they're not liquid like a more regular market, right? So getting in and out of them is going to be a hard time. And I think they're going to be affected by when the stimulus is gone and there's no one is speculating in these things anymore, and all that extra money that everyone is fooling around with is gone. A lot of people are going to be stuck with worthless graphics because that's the only thing that's driving those things. You understand? They're worthless. They provide any type of real value or any type of real solution to the user. You understand? So Bitcoin is a remittance mechanism. You can move money around the world with it, blah, 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 right? I don't have to explain Bitcoin. But how do you explain some graphic of a monkey? It's rare. It's rare. I have this one monkey. Great. $20,000 monkey. So it's just a result of too much money floating around the market. I wouldn't go anywhere near those things. If you can make an NFT and sell it, hey, that's a great thing. If you're an artist and you can make an NFT, oh, all right. So that's my rant on NFTs. Half my viewers just left. All right. Anyway, thanks for asking, Kim. So it can easily turn into a scheme. I've seen a couple of scams talked about when it comes to those things to begin with. From the exchange or the place where you buy them, they were scamming people. So anyway, yeah. Alex, I'm also interested in Stian's question. I've looked at some coins with fib retracement and high to low, looking for 2618. They are often touched. Right, Alex. So again, like I said, you can use extensions as potential areas. Like I said on my chart here, my Bitcoin chart, these are extensions, and I talked about them at the time. If you go back to my streams or you look at my analysis on TradingView, I've mentioned that they're extensions and areas to take money off the table, not to buy, because obviously they're going to be highs, right? And they're going to be good points of reference for profit targets. That's how I like to think of them, or potential resistance areas that are not established yet, because they're potential reaction areas, right? Because that's how people react. For whatever reason, they all see the same number and they react. So I like to use those as reference points when markets are out of control and you have no price history to go by. Extensions can be a good alternative. So thanks for asking. Good question. Kai, you didn't ask me, but in my experience, okay. Alex, okay, no problem. Looks like BTC is following. So Dan, yeah, you mentioned the BTC thing. I wrote about this a week ago on TradingView. My title was, is Bitcoin following the S&P 500? I got like no views on that article. No one cares. But the point is, yeah, I think it's tied to the S&P right now. S&P had that massive rally, right? Let's go back to the S&P chart real quick. No one ever asks me about the S&P. Look at this thing. Look at that thing. That's a beautiful rally on the S&P. That's a lot of points in a couple of days. And a great shorting opportunity, in my opinion. Aggressive at this point, but I'm certainly looking for shorts in that. Now, Bitcoin has the same rally going on, right? And my theory, like I said, I can't prove it, but my theory is you have a lot of these companies that all bought Bitcoin over the previous year or two, right? I remember when all the talk was this. If all these companies, these huge companies, just put 1% of their net worth into Bitcoin, Bitcoin will be at like 300,000 in like a month. Yeah, I'm going to buy Bitcoin. Right? I remember that. And I'm like, why would these people buy this thing at 55K, 60K? Those are the prices where all this talk was taking place. I mean, are these people out of their mind? Do they not realize what they're doing? Or are we just being lied to? You know, I don't know. But if a lot of these companies bought into that, and now, you know, Bitcoin suffers, or whatever, the stock market suffers, and it's tied to these S&P companies, then, you know, you're going to have a relationship. Okay? You're going to have like that institutional relationship. So basically, Bitcoin may just be another S&P follower. And if that's the case, that's, you know, I don't know if Bitcoin was meant for that, but that's the result of institutions. And when they all get involved, people all thought, back in 2018, people all thought that institutional involvement was going to be a good thing. And Bitcoin will be $1 million by next month because the hedge funds are going to buy it. Right? Institutions are a bad thing for something like Bitcoin. I remember when Bitcoin was pure retail. And it was great because pure retail is very reactive and out of its mind. So opportunities are clearer. And when markets move, they since the herd mentality is so strong, you know, the moves were bigger and all that kind of stuff. Once the institutions got in, institutions don't like those type of movements. It's not good for them. So, you know, they want more stable markets. That's what's good for them, especially since they make their money on fees, not on directional trades. So, you know, so since then, since the futures market opened and all that other stuff for Bitcoin, Bitcoin has had some decent moves, but not like it used to move when it was pure retail. All right. So anyway, if it's linked to the S&P, that's not exactly a good thing. All right, because it gives you no variety as far as everything is correlated. Sylvie, Sylvie from Hawaii. Hey, welcome. Hawaii. I'd like to see Hawaii, especially when it's 12 degrees here. Janet Jr., what are your thoughts on Ford? Let's take a look. F went nuts. And look, the party's over on F. People are probably saying F right now. Look at this thing. So I remember someone had asked me about this when F was at the highs, right? I'm like, man, what a move on such a underperforming company historically. Up in here, I said, don't buy it. Let it pull back. What a nasty pullback. That was quick, right? So as far as longs, because that would be at least the structure supports longs. It's a bullish structure. Just keep in mind, you're dealing with a change in the S&P. Ford is obviously going to be like a general market stock, right? It had this crazy run for whatever reason. The S&P, as you can see, had a rally, right? But the S&P's trend may be changing. So you have to keep that in mind. If you're interested in a long, you missed it. The long would have been the bullish pin bar break, right? That's actually not the best example of a pin bar. You have this pin bar from back here. Look at this, right? This right here, it hasn't broken that high yet. So you have a potential buy signal developing. Just keep in mind that S&P is going to go into resistance areas soon. And this would be one of those situations where you can use the fibs, right? Something like this. And you can say, okay, you just notice I'm measuring just this move. And you could say, look, resistance area right in there. And that would be a good place to maybe measure profit targets from, that kind of thing. but I'd be looking for a swing trade and nothing more. Because if the S&P is going to go into a consolidation over the next few months or whatever because of the rising rate situation, that means these stocks have a limited run in front of them. Does that make sense? I would not be expecting new highs out of Ford, especially something like Ford, which has to borrow lots of money usually, right? Or they're usually in that type of business. So something to keep in mind. Short term, sure, I agree with it. Long term, no way. So, like I said, I'm looking to short the S&P. So thanks for asking about Ford. Let me see what else we got here. All right, and I just have a few more questions. I'll be wrapping up soon anyway. Wedge, NKE, sure. Let me just see what I have. Can you take a look at PROM? Okay, I bought a little at 16, and I'm thinking okay, sure, I'll take a look at that. Mark, hey, Mark, nice name. From New Zealand. All right, sure, he wants to see the NZD. Sure, no problem. Let's take a look. All right, so let me begin here with NKE for Bill. All right, Bill, let's see, what's the story here? Was it Nike? All right, so look, this thing got hammered. Let's take a look at the weekly chart real quick. Coming off of that low, great location, okay? Great location for a potential long. You're trying to take out the previous week's high. Again, this is a market stock. So you're going to be following the market. You have a bullish pin bar, higher low situation, off of this area. There's a buy signal actually in play. If you didn't take this high, this pin bar high, what is this? 145.98, so basically 146. This thing right now is at 148.03, so the trade is in play. That would have been an aggressive swing trade. Realize these markets, look at it, Nike is not even really in a midterm, it's not even in a bullish trend. It's more of a consolidation, right? Your range high is up in this area here. You want to look at these old supports, which are going to act as resistances. Look at all this over here, right? Looking back here, you have an old support there, right? So it's kind of overlapping. You have this price gap. I don't know if that's because of a bad report or something, but that's your resistance area. So if you're interested in a swing trade long, that's where you're measuring your potential from. As far as that, I would not be expecting new highs unless the market changes its tune. And I don't know how the market's going to do that with an unsupportive Fed. All right, so that's what I would have my expectations very limited at this point. Does that make sense? And you'd be measuring your risk from this low area right there, which is what? What is that? 143.59, so basically 143.5. Is that the low? 145, what is this low here? 140.65 is the low. So you'd have to measure from, what is this? 145.90. You're looking at least 5 points of risk. All right, based on that right there. That's if you took the pin bar high. The current price, you're looking at 8 points of risk. So you need to make that at least to justify such a trade. Does that make sense? So good question. That's Nike, NKE. Alex, can you take a look at PROM B USD? What is this thing? PROM, all right? I don't like the chart right from the start there. This thing is 954. Now you said you are in from 16. 16, where is that? That's around here. What's this high over here? 28. Oh, so I'm guessing 16 is probably going to be in this area here. Let's see. 21, 18. Is this 16? 15. So you're looking at this area here. Wow. All right. So you are long for 16 and think of where you should take the loss. All right. So let's go to the weekly chart. Let's go to the weekly chart for that. Again, a lot of people, are probably caught in similar situations. But that's what happens when you listen to fake gurus. So here's the thing. As far as taking the loss goes, you have a support right around this area here. Okay, what is that low right there? $8. That's your support. So, I mean, if you want to try to give it a chance to try to hold that, but otherwise, you're in from what you said, 16. It probably would make sense to at least lighten up, maybe close out a portion of the position at a loss around now because your risk is still greater, right? Your risk is defined from that low right there. So do you want to lose another $3 or $4 in it? Probably not, right? But it may not go there. You don't know. So you have to decide how much risk you're comfortable with. Right now, you're stuck inside of this range right here, right? So it might make sense to try to reduce risk up in this old support, new resistance area, unload some there at a smaller loss, still taking a loss, obviously, but less of a loss. And that's the way to manage something like this, because right now the structure favors the development of a lower high and then a test of low. So why blow it out? If that's what the structure favors, why blow it all out at the bottom? Okay, so just something to keep in mind. Again, I could be wrong about these things, but the structure could change. You are in a supportive area. It's just there's a lot of things that are working against you right now. So you have to decide, are you willing to take the chance and hold it till 8 or a break of 8? Or would you rather reduce some risk, maybe unload 20% or 15% of your position? I don't know, something to make you more, comfortable or whatever, if that's the right word. And if it tests the low, perhaps, and it doesn't break, maybe you could put it back on. And then if it breaks, you get out and it's a smaller loss anyway, you understand? You have to decide how you want to manage that risk. But right now, the structure is not favorable. So again, you have to choose what's more appropriate for you. All right, anyway, good question. All right, let me see what else we got here. So we got New Zealand. Let's take a look at New Zealand. And okay, I noticed that you're not using volume on your charts because, all right, Alex, I don't use volume on my charts because it's completely worthless information. I got students send me charts with volume histograms on them, and the first thing I tell them is, why do you have that on your chart? It's useless. That's why. It provides no value at all. It's an illusion. People know, but I have volume on my chart. It tells me something. It tells you nothing. The volume on these charts, first of all, we don't know, where does that volume come from? A central exchange? How do we know how accurate that volume is? Is the exchange reporting the hidden orders? Is that reflected in the volume also? Or, what kind of volume are we seeing? I find that price action itself, the candles, give much more valuable information than those volume histograms. They're pretty much provide no value, and I like to keep my charts simple. Less is more, right? I want to be able to make decisions on the least amount of information possible, not more. That's why no one makes money. They have all these overcomplicated things going on, and they're making judgments on information that's frivolous and useless. Why would you use that information, right? It's like fluff. There's no reason for it. So that's why. Anyway, okay, New Zealand. Yeah, this thing's getting hammered, right, against the dollar. Let's take a look. Let's take a look what's going on. Plus, there's a bunch of news coming out, right, from Aussie, from the Australian dollar. We looked at tonight, I think, and then in the week we have some stuff. So that can affect this pair. This thing is, you have a lower high. It broke those supports. The general structure was bullish, but now you can argue that the long-term structure, this is a weekly chart, you can argue that the long-term structure is bullish and you're going into support areas which are going to conflict, right? Like that, this area right here. See this congestion area right there? So you may have some buying that's going to try to step in. So you may have some aggressive swing trade ideas here. You have it's almost an inside bar, not really, but you may have, if the high of this candle is taken out, you would actually have an aggressive buy signal. The low is where you would define your risk from, and potential, you can define potential profit targets in this area. Again, it's aggressive. You're going against the structure, the short-term structure. The more appropriate thing, or the more conservative thing to do, would be to look for the short, right? The lower high, sell signal, sell signal, and then short. That's what I'd be looking for on something like this. Again, and you're fighting a strong dollar, right? That dollar had that little pullback that I showed earlier, the failed breakout situation, but the general trend on the dollar is strong, and the Federal Reserve is behind it. So I suspect that the dollar will continue, and I would expect pairs like this to maintain their bearish structure until the dollar changes its tune. Does that make sense? So good question on New Zealand dollar. Let me see what else we got here. How do you ponder? All right, so a question like that, Dave, I don't have any, I don't get married to any opinions, okay? So I just look at the structure, I look at the levels, and I'm looking at the price action. And right now the structure is bearish, but we're in a bullish area. We're in a bullish support area. So either we get the sell signal and this thing pushes the lows, or we get the sell signal and it produces a higher low, right? That's basically what I'm looking for. And with that information, I could make a judgment of some kind. But otherwise, I have no opinions. I don't predict anything, all that other fake guru stuff. All right, let me see what else we got. Wedge, okay, yeah, I should be able to catch up on some of those assignments. Again, I apologize. I'm a little bit behind on the assignments, but I've had a lot of things to do on top of the assignments. So it's coming. And like I said, by the way, people, I'm raising the price on my training program even further. I know a lot of people thought it was expensive to begin with. It's getting more expensive because those assignments are complex and they're very time consuming for me to correct. But I want you to have a good experience. So it's worth it. Anyway. Oh yeah, and for just to kind of give you some perspective real quick on that, there are people out there that are willing to pay $600 for advice on how to improve your situation, I guess self-help advice you can call it, to get more dates with women. Okay, $600 an hour for that kind of information, right? Meanwhile, I'm offering information to help you save money and actually potentially make money in the future or make better decisions in the future, or at least, if anything, protect your capital from an environment that has been made to rob you, right? But no one wants to pay for that. Maybe if I lie and I come out with, you will make billions of dollars if you buy my secret strategy that I came across by mistake, this little weird trick, and I make billions of dollars a minute, and you can too if you just pay me $1,000, right? Maybe if I lie like that, people will be more interested in my program. All right. Anyway, so that's that question. All right, X. Dan, you said you're waiting for a lower low or double bottom on Bitcoin. Do you think that it is possible to go without a lower low? So Dan, so again, that's really a question of structure. Anything is possible. So we always have to keep an open mind for anything, right? That's the first thing. Second thing is, it's, the structure favors lower high to lower low. That's what the structure favors, but that doesn't mean that it will deliver because we're in a conflicting area. So that's the way I look at it. The market's going to have to prove itself. I don't know, right? There's no way to know. So either we get the higher low or we get the failed low. Now you're saying, what if it just keeps going, right? What if this thing just keeps going? Which is also a possibility. What if it just keeps working its way higher and higher and higher? That's possible. But based on the context of our environment, I just think it's a low probability. So that's why I don't expect something like that. I can understand what you're saying. Like we had a situation back here and it never pulled back. I remember we were like, when's this thing going to pull back? It never pulled back. But we're no longer in that environment, right? We're going to have to come out. There will, in order to see that again, we need to see some kind of catalyst. There needs to be something special that comes out that really puts something behind Bitcoin, right? Whether it's an announcement from the Federal Reserve or something, right? And right now, all I see are things that are working against Bitcoin, especially if Bitcoin is tied to the S&P, especially if that's the case. Because the S&P, the party is over on the S&P. And so that's why I think the probability of such a thing is very low. Keep in mind, back here, Dan, when this thing was rallying like this, so was the S&P. And the NASDAQ was going nuts at this time, right? Santa rally, they were calling it. So that stimulus party's over. And I would think that the probability of such a move is low. So I hope that answers your question. Shuai, welcome from Shanghai. All right, 5:40 a.m. Wow, thanks for stopping by. I don't get too many people from China in here. It's probably because of that time zone thing. So I really appreciate that. Thanks for stopping by. Happy Chinese New Year. Yes, thank you. You too. I could speak some Chinese, by the way. Wo sure, Mark. And I know some bad words. Ni hao. Well, sure, Mark. That's about it. I'm not going to say the bad words, though. You probably won't appreciate them. But I learned from a guy in Taiwan. He taught me how to say some bad words. Anyway, just wonder when you would start your next training session. Oh, so Shuai, there's no start. You start at your own schedule, right? So it's 14 days. Once you make the purchase, you begin on that day. It unlocks the first section, and then over the next 14 days, each section will unlock every 2 days. And then you go through the videos. The videos are very short. There's no fluff. And then there's like an assignment, right? The assignment is the key to this whole thing. You do the assignment, and then I give you feedback. I'm telling you what you're doing right, what you're doing wrong, and I give you some suggestions on how you're, are you getting the information? It's amazing. Some people think, oh yeah, sure, I understand trend lines, and then they give me a chart, and their explanation is off. So that's an opportunity for them to basically like, oh, I didn't realize that, right? So because a lot of these fake gurus out there, they don't have my kind of experience. You're getting feedback from a chartered market technician. I know most people don't know what that is, but it's a professional designation that's not easy to get. And on top of that, I've been in this business for more than 20 years and all that other stuff. I don't have to explain all that. You can find that on my website and whatever. But my point is, that's the value of the program, is the feedback. And you basically have a 14-day period to get through all the assignments. If you can't complete the assignments in that time, it's okay, because you have access to everything for a month. And I am going to be making improvements on the program. So you begin whenever you want. All right, anyway, good question. And thanks for stopping by. Alex, thanks for the volume answer. I noticed that whenever we see a volume kicks in, which tells me a lot of people, well, Alex, the thing is that may be true, but it's hard to, I've spent a lot of time trying to evaluate like volume, and I've researched that, and is there any, it's not like I'm just saying, I'm just saying, oh, volume is no good, and just saying, whatever, just because I feel like saying that. I've tried to use volume in my analysis, and I have not found any rhyme or reason or any consistent pattern or anything that can really give me that extra, not anything consistent. Once in a while you see the obvious, oh, volume spike at the low. But then when you try it the next time, it's just completely nonsense, right? So if it's random like that, then those random occasions are completely useless to me. I'm not interested. I want something that basically I can see the same exact thing every time, and I can basically assign some kind of probability to it, because I know generally it works more times than not. Can I say 90% chance? No, I can't say that. But can I say more than 50%? Yes, I can say that. It may be 51%. It may be 55%. I don't know. I'm not a quant, by the way. But if there's a general, I can put a general probability on that. That's what I want. And I can't do that with the volume. I'm not able to do that at all. So maybe you can. But thanks for mentioning. All right. I hope I'm not the cause of your... No, Bill, you're not. The cause is I have a lot of chart assignment part 2s that I haven't gotten to yet, and they're complex assignments. And you have to understand, when I get a chart from someone, I don't just look at it for 1 second and be like, okay, yeah, it's good. And then I write like a quick one, hey, good job, and that's it, right? I have to first assess if you understand properly what I'm trying to teach you. And then once I figure out, where you're right and where you're wrong, now I have to write up something for you, right? I have to write up something specifically catered to you. Hey, you can do this better, or maybe you should consider this, or maybe that, or hey, you got this right, but look at this, right? And that's all specific to you and your chart. It's very time consuming. So I didn't expect it to be that time consuming. That's why I'm raising the price. Anyway, all right. So Peter, it's not you, Wedge. Peter, gray hair. I don't have any hair. So you don't have to worry about causing more gray hair, right? I don't have any hair to go gray. Anyway, thanks for mentioning. Sure. Oh, now Dan is speaking Chinese too. He can write Chinese. I can't do that. All right. Well, you guys are speaking Chinese to each other. Yeah, I never got to the writing part. But I have some good bad words, though, which I can't... YouTube will probably ban me if I say them. All right, cool. No problem. No, you guys are good. All right, you guys are good. I'm going to wrap this up now. Some great questions, everyone. How long I've been talking? I've been talking too long. You guys have to stop me. I talk too much. I like to talk because I don't talk to anyone all day. I'm, working and I'm quiet. So when I talk, it's out of control. Anyway, so everyone, thank you all for your great questions and for stopping by. I hope you all got something out of the stream here. These streams, by the way, are going to be more valuable to my students because now you can ask me specific questions on things you're working on, or I can explain specific things to you and you're going to grasp them much more because you have hands-on experience, right? You're working on them. And hopefully you get my certificate of completion when it's done. Bill, I'm sure you'll let me know if you get yours or not because I have to make sure this platform works correctly, right? You're supposed to get this certificate and I want you to have it. So you're supposed to get it after I give you all the grades, and you have to make sure you've done all the assignments and all that other stuff, and then you should automatically get it. I'm going to be asking about that. Anyway, so if anyone's interested in the program, there's a link in the descriptive portion of the analysis. You can start it at any time, all that other stuff. Otherwise, okay. Dan is very clever. Google Translate. Here I'm thinking the guy can write Chinese. Yeah, I forgot about Google Translate. Yeah. Okay, but I can actually, but I don't have to use my Google Translate. I can speak some words. All right, no problem, everyone. So I'm going to wrap this up. Okay, yeah, cool. I appreciate that. See, students are generally happy, and that's good. That's what I want. The whole objective of the program is to help you have that defensive mindset and be prepared to anticipate. Just like when I talk about this Bitcoin analysis here, it's to help you prepare for what can happen next, so that you have some sort of plan, right? And you have better perspective on the market. People think that these training programs, right? Your typical training program is going to be all about, I'm going to learn a secret strategy and I'm going to make money. I'm going to make billions of dollars, right? That's the dream that they sell you. My program is about to help you protect your capital and to be defensive. And as a result, the byproduct of that is you have a better chance of making money over time. Right? That's the idea. That's the experience that I went through, and it's not easy to transition your thought process into that, but that's the idea of the program. And this is beginner level, right? So I'm giving you basically 6 steps to go through to help you get that sense of context and better assess risk. That's the whole point. I'm not giving you a trading strategy. I'm giving you a way to assess risk, and then you can apply this to a trading strategy, right? You can pull up some nonsensical, look at my moving average, blah, 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 right? You could pull one of those up, and now you'll have much better perspective as to if that buy signal that they're telling you is sensible or not in terms of the market intent, not what the moving average says, because moving averages are nothing more than random information, really, because it's based on, all it's doing is smoothing out price, okay? After the fact. So it's useless information. You want to be able to think ahead, and that's what those 6 steps are there for. All right, enough promotion. I got to stop talking. All right, no problem, everyone. So, yeah, I know, Dan. I know. Dan has completed all the assignments, and I saw your assignment in the queue. I will get to it, Dan. I'm like I said, I'm a couple of days behind. I'm working hard on getting that done, and now that I have a little bit more free time, I should be able to complete that. So I appreciate your patience and your great effort. A lot of people have been putting a lot of effort in, and I appreciate that. All right, everyone. So I'm going to leave you with that. Again, I'm streaming every Monday. I'm not streaming on Thursdays. So if I missed your question, I apologize. You can come back in next Monday and ask me. If you'd like to ask me other questions about the training program, just go to markpremarkets.com, or you could send me an email at mark@markpremarkets. It's Mark spelled with a C, just to be clear. All right, and I'll get to those as well. I have a lot of stuff that people send me emails. I have to answer those, stuff like that. Anyway, all right, everyone. So thank you for your great questions, and thank you for spending this time with me here. Wherever you are in the world, okay, have a great day or a great evening, and thank you for watching.